Government just releasing the latest data on inflation this morning.
So we got CBS News business analyst Jill Schlesinger joining us live from New York with a look as far as where prices stand. Jill, let's dive right in. What did August data show us?
We saw the inflation rate increasing by 2.5% from a year ago. That's down from 2.9% in July. This is mostly due to gas prices, which are down by 10% from a year ago. So we look at the core rate, which is a different measure. It removes food and energy because they're so volatile. The core rate was up by 3.2% from a year ago. That matches the previous month. And the culprit of the core rate remaining high, it's shelter. We've talked about this in the past. Shelter in the month of August accounted for more than 70% of the increase in the core CPI.
Jill, I think this can sometimes be confusing. So remind us that even when the inflation rate is falling, we still feel like prices are really high.
Yeah, this is so, and you're right, it is confusing because we use these terms almost interchangeably. But inflation, that is an increase in the average level of prices of goods and services. So that's when things are going up. Now, when prices actually go down, we have a term for it. It's called deflation. I know you want prices to drop back to 2019 levels, but remember, gang, the only reason prices drop is that we are in a deep, nasty recession where we have job losses and lower wages. So what's happened is in the beginning of this COVID inflation surge, wages were not growing faster than the inflation rate. Now they are. But going forward, what we're hoping for is for a wage pace that is growing faster than that inflation rate. And that will be the key to putting the post-COVID era behind us. It really will. We need to be earning more money. Prices can just stabilize and we'll still be fine. That's the key component.
Okay, so the Federal Reserve, they've been trying to bring inflation down, as we mentioned, pushing the interest rates up, right? We know that. The Fed meets next week. Looking at that crystal ball, what is the Fed going to do?
I think that we're likely to see the Fed cut by 1/4 percentage point. That would just be the beginning point of the process, right? Because they'll probably be lowering interest rates for a year, maybe 2 years. We're at 23-year highs in these interest rates. But I think that now the Fed looks at the core inflation rate and says, it's not a slam dunk. We've done a great job. We need to do better. So I think they start with 1/4. And from there, we'll see what happens next.
Okay. Jill, as always, we appreciate your insight. You can see Jill regularly on CBS Mornings and the CBS Evening News with Nora O'Donnell. For more analysis, you can go to jillonmoney.com.